There are ways to invest in the crypto asset market without buying cryptocurrencies or investing in ICOs. In fact, there's a whole market of securities now connected to cryptos that are valued uniquely. At the end of this section, you'll be able to make use of these alternative crypto asset investments. So perhaps you want to invest in the crypto markets, but you're unsure about actually owning a crypto asset. Maybe you don't know where you're going to store the crypto asset, or you're not sure how to get on an exchange. So there's some alternatives to consider. The first is the Bitcoin Investment Trust. Now, this is listed on over-the-counter markets under the ticker symbol GBTC. Every share of GBTC equals 1/1000th of Bitcoin. So if Bitcoin is priced at 10,000, then GBTC should be priced at 10. However, it doesn't really work like that. Additionally, this was launched in May of 2015, so it's a lot newer than Bitcoin. It was also launched by a group called Digital Asset Holdings. Next, this is not an ETF. It may look like an ETF because it's traded on over-the-counter markets, but it's really an exchange-traded trust. And what you're doing is you're buying from accredited investors. And this is an important point, and I'll show you why in a second. And lastly, there's a significant premium over Bitcoin. So let's look at a chart right now of the GBTC versus physical Bitcoin to show you what I mean. So this is a chart of the Bitcoin Investment Trust, GBTC, versus physical Bitcoin. And the first thing you'll notice is that GBTC tends to trade at a significant premium over Bitcoin. Now, GBTC in this chart is priced at $16.92. And we know that every share of GBTC is equivalent to 1/1000th of a Bitcoin. So to get the Bitcoin equivalent price, we multiply by 1,000, and this represents $16,920 worth of Bitcoin. Now, Bitcoin is trading at 98.30, so you can see there's a significant premium from GBTC to Bitcoin, which is over 70%. For the life of the GBTC, it's traded at a significant Bitcoin, except for this one period in 2017 when Bitcoin spiked and the premium went away. So you might be wondering, well, why does the GBTC have so much more of a premium than Bitcoin? And the answer is pretty simple. With the GBTC, you can actually own it in a Roth IRA or a retirement account where you can't own a crypto asset in one of those accounts yet. The other reason is that with the GBTC, you don't actually have to store any coins. The trust takes care of it for you. So if you're thinking about investing in this, just consider that they are a huge premium to Bitcoin, even though it might help you in a retirement account and you won't need to store your crypto asset anywhere. Another way of gaining exposure to the crypto asset class without actually owning a physical crypto asset is with the futures market. Now, in the futures market, you're not trying to predict the future. You're just buying a security that secures delivery at a known price, time, and date. One consideration in the futures market, if you're investing in physical crypto assets, is what do the term structures look like? And I'll talk more about that in a minute. But just so you know, there are a couple places to buy Bitcoin futures. The first is on the CBOE. Ticker symbol is XBT. Now, the CBOE, one contract represents one Bitcoin, and they allow for 40% margins. The second place you can buy a Bitcoin future is on the CME, or the Chicago Mercantile Exchange. In this case, one contract is much larger. It represents 5 Bitcoins, and the margin is 43%. So let's take a look at the term structures right now of Bitcoin and make some sense of them. So in the futures market, sometimes the term structure can be predictive of price moves. Now, the Bitcoin futures market is relatively new and doesn't have a long time frame of futures available. For instance, here is a chart of the term structure of the Bitcoin futures on the CBOE. And you'll notice that there's only 3 months available. There's March, there's April, and May. And right now, the April contract is trading at 99.40, the May contract's at 99.60, and the front month, which is March, is trading at 10.50. And this is a pretty flat slope of a term structure. Sometimes in other commodities, such as oil or natural gas, there'll be backwardation or contango, and that can be predictive of future prices of the actual physical commodity. But right now in the Bitcoin futures market, it's difficult to determine which way price is going because there is a lack of data and a lack of contracts available to trade. But perhaps sometimes in the future, this will be more predictive of pricing. So we've all had this experience before. Somebody gives us an investment tip or we hear of something that's the hot new thing. In the stock market, there are some steps you can take to analyze whether or not this is a viable investment or not. In the crypto market, it's the same way, but there's some key differences. Let me go into them right now. So if you're thinking about a new crypto invest in, the first thing you should look at is the white paper. Now the white paper is an outline of what the token or the new coin will be used for and how it will be distributed. Next, you want to look at their Telegram channel. Telegram is a messaging app that's available on your desktop or your mobile phone, and you can simply search for that coin on Telegram and see how many people are following it and what are they saying. And you want to make sure it's not just people talking about making money in the coin. You want to see that it solves a real-world problem and has big plans. Next is the issuance schedule. Now, we looked at this at coinmarketcap.com. The issuance schedule is how many coins or tokens available right now versus how many will be available in the future. And this is to make sure that there is some type of scarcity value to it. You don't want to buy any crypto assets that only have 25% of their tokens issued now with another 75% or even more in the future. There'll be no scarcity value. And lastly, you want to think about the decentralization edge. What is the problem that this token or coin is trying to solve? And what is the market for it right now? Can this market be disrupted and can it be decentralized? And if you follow all 4 of these bullet points, you have a great way to analyze a new crypto asset idea. So that concludes our section on alternative to physical crypto assets. Now you should be able to make use of alternative crypto asset investments.